I'll just start it. So just a quick introduction to you guys. For those that want to join online and have a look at this recording later on, I'm joined by Paul Miliotis, who's Fund Manager and Managing Director at M Squared Capital, and he's also the Director of the Lending Alliance. I'm joined by Adam Bowles, who's a partner at Nexia in their Business Advisory Division in Sydney, and I'm joined by Justin Dodsey, who's the General Manager for Scottish Pacific in New South Wales and the ACT. So, lads, thanks for joining me today for a bit of an informal chat about what we're seeing in the market at the moment because of the interruptions from COVID-19. And I suppose from the outset, what's the most surprising thing that we're seeing at the moment out there for SMEs?
Right, I'll jump in. I guess just the speed that this has taken place is really surprising, and the speed that everyone has had to react, including our own businesses. Just getting everyone to work remotely where possible, putting safe work measures into place around hygiene and social distancing, finding new ways to correspond with our staff, our suppliers and our customers has been a challenge, and we've really had to move quickly and likewise with all my clients. Just finding new ways to do business has been a challenge for all of my clients, and keeping abreast of the daily updates that are coming from the government, which are impacting pretty much all businesses and individuals. It's just really surprising how fast this is moving.
Yeah, definitely. Speed's a big thing. And I think people's planning seems to have gone completely out the window because you just can't plan for something like this.
I definitely second that, Pat. I think maybe not surprising so much now, but remarkable is just the level of confusion out there. And that's, we deal with a lot of businesses, and just normally confident business people that are at a complete loss. You just see the change in their persona and their confusion. There's just so much information overload coming through, including the government assistance and lenders assistance and all that sort of stuff, which is all great stuff. But there's so much of it, and it's changing hourly and daily. And I think that's where advisors become even more important than they always are. Lawyers, accountants, brokers. They also need to make sure they're fully on top of all this stuff and understand it all, and can be a source of knowledge for their clients, because that's what's unnerved me a little bit, is just the confusion out there. And I think the government assistance in particular is becoming more and more significant, and it's going to go a long way to help a lot of businesses survive this, not thrive through it, but survive it. And I just think that's getting that information packaged up and in an understandable form so that people can get some certainty and some direction.
Yeah, good point. I mean,
on that note, Pat, I'll just say on our side, we're getting a lot of calls that require a bit of compassion at the moment. People are bleeding, particularly from the lending side of things. And a lot of people are asking how they access, SMEs, how they access that $250,000 government effectively guaranteed or 50% guaranteed facility from the banks. The problem is it's been announced, and a lot of the lenders haven't had time to catch up what that actually means. So when clients of ours are asking, well, how do I access it, Paul? We're referring them to the banks, and the banks haven't got a process yet. So there needs to be a bit of patience. But when people are freaking out, significantly freaking out, and there's no answers. So to your point, Justin, it is still up in the air what can be done from a banking perspective. One thing's for certain, we're fielding a lot of calls, and the banks have been very good in deferring the payments for clients that are in distress. But make no mistake, it's a deferral. So people will still have to pay the interest at a later date. So it needs to happen now so that the short-term pay's gone. But on the flip side, what we're finding is some of our clients who are significant property owners are having to give businesses that are in pain rent abatements, complete abatements. So they're in a little bit of a conundrum. Well, they're losing the rent. They're going to have absolutely no income, but they will still have to service the debt at the back end once everything does recover. So we're finding a bit of a disconnect there.
Yeah. And Paul, on that front, are you seeing, first of all, many inquiries now being picked up as a result of this? And secondly, whilst the government's obviously stressed that the big banks to show leniency and and defer to existing facilities and customers. Is it that the banks, in their actual then credit appetite and their actual new lending appetite, is tightening, or is there still lending opportunities there from the big banks?
Look, there are, but they're definitely asking a lot more questions. So we've had a few that were in train, which were residential style mortgages, and now they've come back and say, look, you are in the restaurant game. We need to have some clarity on how you've been affected. We've had banks coming in and declining loans based on industry, which you can't blame them. You've got banks coming across and saying, look, we do have responsible lending guidelines. Now, that's outside of the commercial lending side of things, but it's still affecting a lot of people that, you know what, we need to make sure that we're not putting you into hardship. So while the government is saying, guys, lend to people, we've gone through a Royal Commission. The banks have been hammered. They can't put people into duress just because people want them to lend money. So in the short term, we are seeing a lot more care. There is still appetite to lend, but in industries that haven't been affected. So it's a bit of a catch-22 on that front.
Yeah. I was just agreeing. I'm seeing a lot of confusion from clients when it comes to this 250,000, 50% government backed. Clients believe they're eligible for it and they can't wait to get their hands on it, but there's not a clear message from the bank as to an avenue for that. And I agree the banks are being a little bit cautious. So we need some clarity coming out soon around how clients access this 250 and what the criteria are, because at the moment there seems to be a frustration in the market.
Yeah, definitely.
Worth me adding in my knowledge on that, Pat. We've got a team of people working 24 hours a day on compiling all of the assistance, both from the government and the lenders and different options. And that's for everybody. We're referring our clients, customers, brokers, any contact, any business we come across, we're referring them to that because we're updating that in real time, and that's just on our website. It's on the actual landing page on our website. It takes you immediately there. On the 250K, our information as of last night, it's not something Scottish Pacific can get involved with. The banks can and other lenders can, because one of the caveats on it is it must be unsecured. So it can't have personal guarantees. It has to be an unsecured loan without personal guarantees, and then the government will cover half of the exposure, so 125,000 of that 250. So it will be, that's the information we had as of last night. And again, I agree with everyone. It's been really, really difficult, even for us as a major lender, to try and get clarity on that.
Yeah. And I suppose that 250 does go a long way, but then I suppose it's really important as well. I'm guessing, Justin, you'll be seeing this, is that SME businesses need to be looking at different finance options available to their businesses outside of their traditional commercial loan backed by residential security. So surely that brings into play your debtor finance, your equipment finance as options that businesses need to be looking at more and more, especially at the moment.
Yeah, it does, Pat. I guess even at all times, it's prudent for businesses to understand all of the assets that the business has and the value of those assets and how they can be leveraged to improve cash flow or for expansion or capital equipment, those sorts of things. It's still a case-by-case basis. I mean, there's certainly businesses that it's appropriate to use commercial property or even personal property with directors. It's appropriate to do that. It's others it's appropriate to secure against equipment. Others it's appropriate for some short-term unsecured stuff. But absolutely, in these times, it makes people have a harder look at what they can use to leverage further funds. And that's where, look, receivables finance, debtor finance, invoice finance has traditionally been a little bit misunderstood, and even being able to leverage receivables as an asset has been a bit misunderstood. So people are taking the time to understand their business and the assets within the business more now. And a lot of people are realising that the receivables are one of the largest, or in many businesses, the largest asset that they have on the balance sheet. So they're actually going that step further to try and understand it. So we are seeing a lot of inquiry from businesses that wouldn't have come to us in the past, which is good. We're also seeing a lot of inquiry for our asset finance product, because it is a product that does, we fund second-hand equipment, we sell and lease back, so we can actually generate equity and cash out of owned or unencumbered assets, those sorts of things. So a lot of demand for that. The only thing, there's a bit of a caveat on that, in that we do need to be a bit careful, because debtor finance in particular, we're funding against invoices that we know are going to get paid within terms or thereabouts. It's not a situation where businesses can come to us now with a ledger full of stuff that will be impaired and expect that somebody's going to lend the money against it. It has to be debt that is expected to be paid, and that's what's a challenge at the moment. A lot of people in our business going through trying to understand what debt out there, or what receivables, what invoices are actually still going to get paid and what's not going to get paid. That's our biggest challenge at the moment.
Yeah. And Adam, I'm guessing you'd be seeing a lot of that from your clients in terms of, in particular, how their cash flow is looking, and especially around the debtor side as well.
Oh, absolutely. Cash is king in this market for all businesses. Some of our worst affected businesses don't have any revenue or very little revenue coming in. So that's one problem. But businesses that are still continuing and trading well have the problem of actually collecting in those debtors. And we see that as a real issue for all businesses through this period.
Yeah. And Paul, one of the things that always is popping up right now, which is obviously something that everyone's sort of asking, is how does this affect the property market as well? Obviously a very safe investment option for Australians. People are asking the question, what happens to housing and the value of property?
Yeah, look, because we're lending money ourselves in the M Squared business, we're very opinionated on where we think property prices will go, because when we're lending, it's basically an asset lend business. We do our own analysis, and we did our own analysis during the GFC, and we're seeing parallels here, particularly that in the GFC we found, let's talk Sydney just for this conversation. We saw in the GFC that the residential market dropped around 7-odd%. People may have thought it was a lot more than that. We had a bigger drop in the Sydney market in 2016, as opposed to what we did in the GFC. We believe it's going to be similar in this kind of environment, where you might have a drop in the residential market of around your 5% for the short term, but there is a significant supply issue here. So we do think that it will recover pretty quickly, and we actually think it'll probably increase in value in this cycle. So residential, we're still decently bullish on. What you're going to find are your valuers are going to be a little bit more cautious. So that's going to drop the amount you're going to be able to borrow. We're seeing valuations being shaded significantly. On the other side, though, your commercial valuations, we see significant risk. In the GFC, we saw a drop, let's round it to around 15 to 20%. That could happen here as well, depending on how long we're all locked up in this hibernation mode. So you're going to have businesses that are struggling. They've been rent abated. They could be rent abated. How these businesses perform on the back end will be very... We'll wait and see, but also we're going to find out, or we think we're going to find, that your cap rates on your commercial property are going to go up slightly. There's a bit more risk, so we'd kind of be a little bit more cautious lending in the commercial space right now, and we'd probably think it'll be dropping, up to even 15% in the short term. That's our view.
Yeah, it's unprecedented time at the moment. The other thing is we're all in the service game at the moment, and one thing that has been completely upended is our traditional marketing channels. So our face-to-face with clients and one-on-ones, and really pushing that old school traditional marketing to get clients on board. How are your businesses now dealing with marketing, and what are you guys seeing in terms of that's working in getting some traction to keep in front of clients at the moment?
Yeah, Pat, I think, look, we're lucky in a way that our business model's always been skewed quite heavily to referrals. So still the vast majority of our business comes from finance brokers, accountants, lawyers, advisors, not anywhere near as much direct, although our direct inquiry is growing every year. So that's a little bit easier to continue those relationships. I mean, obviously you're on the phone, you're on Skype, We had a couple of Skype drink sessions with some of the brokers last week. Those sorts of things to keep people sane and just keep that relationship going. So that's look, we rely on their efforts to continue to look for new clients, support their clients, and then we help them. So we're still here, we're still contactable. We can do everything that we do online that we can do face to face. We have had some success though going back to traditional forms of marketing. I mean, the last time we did a mail out or anything like that's probably 10 years ago, but we kind of flipped it through a genuine effort to help people, so help our clients and help their clients, so their customers. We have sent out some communication around our information hub on our website. So I can't harp on enough about people have to know what the government's offering them, because it's becoming quite significant. So we reached out to people through that, and that inadvertently started to generate quite a bit of incoming, or is starting to generate some incoming inquiry. So I guess to me that sort of highlights that maybe we need to look at older, more traditional methods of contacting, email and snail mail and those sorts of things. But I guess you still have to be careful that it's not just a blatant marketing effort, because those sorts of things do get ignored these days. So.
Yeah, absolutely. Adam, yourself, you guys, you're in that. You're obviously very much client face-to-face type business. What are you guys employing at the moment to get that reach out there?
Yeah, look, we have always gone down the social media track as well, with a lot of direct mail out as well. Obviously, with what's going on, we've increased our activity and frequency of the releases. We're releasing things daily with updates, and just trying to get information clarified out to our customers and contact on various sources, releasing podcasts. We're releasing things on LinkedIn, direct mail outs, really also having... Sorry guys, I just lost my train of thought. Having direct video conferencing has picked up a lot. So instead of a traditional face-to-face model, we're moving to video conferencing a lot. So this is having quite a bit of success, because we're finding we can have more frequent meetings with our clients. So rather than meeting with our clients weekly or monthly face-to-face, we can almost meet daily on these video conferences to help battle this changing landscape.
Mm. And it's that routine, Paul, that we get into when we go about obviously our sales. Once again, we've had to completely change and become adaptable on our usual routines.
Look, it is for us as well. I mean, we're lucky from one standpoint in that things are changing so quickly on the traditional lending side. You're having a huge reduction in fixed rates. So we've just put out a communication for people to assess that. It's a hard market, because you don't want to be selling when people are in trauma. But in the same breath, there are people that can take advantage of the low rates that should be aware of what they can do. Like, you can fix your fixed rate now for, let's take a round number of 2.2%. That's when your variable rates are in your high twos, let's call it. There's an advantage for people to be, look past this difficult time, for people that are still trading and still working. So there's an advantage that can be taken, and people should be looking at that. On our investor side, people, as soon as markets started crashing, we had to communicate very strongly to our investors, because they get nervous where they're investing their money against property. So we went to an older style communication. We did a risk assessment on each individual deal and communicated via email, followed up by phone call to every single investor. That needed to happen, because when people are worried about their investments, it leads to even bigger issues.
Yeah, I think you hit it there. Communication is key. Already we're seeing our clients anyway, are pulling away and just not communicating enough, and therefore are missing out on the information, missing out on the value that comes through. And it's just so important that clients keep up that level of communication with us now more than ever.
I think it takes a lot of proactivity on our part as advisors to make sure we're reaching out, just to see if they're okay and see where we can help. There's a huge element of relationship building, and to make sure that they're going to be here on the other side and can get through this, whether they're facing a hibernation period or whether they're just facing some uncertain times. It's important we're communicating our thoughts, and that we're there to help.
Yeah, absolutely. And Adam, you'd be seeing, obviously there's a lot of information currently being thrown at everyone. How are you assisting your clients to work through and really assist them in working out what's actually relevant to them at the moment and what they can utilise?
Yeah, look, I mean, the initial step is we're releasing to the wider market and our clients, of course, daily updates about the changing landscape and what's available. But on top of that, we're reaching out to clients one-on-one with that personal communication, whether it be over the phone or via a video conference, and just working through what's happening in their business, measures that can take place to help them through this period, including contacting banks, talking about capitalising interest or repayment holidays, talking to landlords, talking to suppliers, creditors, employees. So working through all those issues, but of course, working through the stimulus packages that might be available to their business, which some of them, are quite generous, I think.
Yeah. I think one of the other difficult things is planning. How do businesses go about planning for what's coming in the next 6 to 12 months? And I mean, how long before you think we're going to see some normality of some kind come back into the market?
Pat, it's crystal ball stuff. There's so many aspects to it. We've got some good news stories. We're seeing some clients in some industries just overrun by demand, and we're seeing some of their challenges are getting staff. So we're connecting some of our labour hire clients that have had layoffs in certain industries to get in touch with them. So through that, both of those businesses are doing well. So there's some good news stories as well. As far as the end time and how we see things recovering, there's a few different aspects, and obviously there's the health aspect. I don't think any of us can confidently comment on that as to when people are going to be allowed to go about their normal business safely and not have this rear its head again. There's the confidence part to it, which has taken a big knock. And then I guess even when everything does get back to normal from a business perspective, the mind boggles when you think about the knock-on effect. I mean, a lot of businesses out of this, probably including our own, will start to realise that you can work from home efficiently. So as Paul said earlier, what does that mean for commercial property? And what does it mean for the ancillary services, the cafes and the transport and the taxis and all those sorts of things? Once you start to get into it, that knock-on effect is, like I said, it's mind-boggling. And then once everything is back to the new normal, because it won't be exactly the same, the way we do business will change, you've then got to realise that all of this government assistance, which is a huge amount of money, it's money well spent, that's for sure, but it has to be paid back. So this is going to be probably a generational, not burden, but a generational challenge going forward once everything does get back to normal. So those things make it so hard to sort of answer when will things get back to what we perceived as normal.
Yeah, absolutely. I mean, and you hit it on the head. Business practices will change as a result of this, and working from home and a lot more IT infrastructure and things like that are going to come to the forefront, you would think, so that we and all our clients come out of this leaner, meaner, and ready to really take on board some of these changes to make good in the long run. Is that what you're seeing, Adam, as well at the moment?
Yeah, well, nice to have a crystal ball, but what I'm forecasting on the back of this is that we see a lot more, remote working, hot desking, where previously businesses might have had that traditional model and been a bit scared or just unknown how to action it. They've been forced into doing it in the past week. So I think that will continue after this is all over.
Yeah. And I suppose the next question is, Paul, how does the RBA react to this on rates at the moment? People have been surprised of late. What's going to happen, do we think, moving forward on that front?
Look, we don't see the variable rates going much further. They can't really adjust. Well, I think their desire to adjust under the 0.25 mark is strong. We are seeing unbelievably well, historically, the cheapest rates I've ever seen in my 17-year life cycle in the industry on the fixed rate portions. When you can fix your rates for 5 years under, let's call it under threes for your owner-occupied house, that's telling you that we don't see the rates increasing at a rapid rate in the short term. And to be honest, I don't see how we can when people are struggling a little bit. So a 1% increase in rates is going to have a massive effect on people right now. So I think it's going to be low for a long time.
Yeah. I suppose the other thing that also comes to mind with this is looking at what industries and sectors will bounce back as a result of this. And you have to think onshore manufacturing and bringing resources back into Australian arms is something that you'd think would be a focus on this in the short to long term period for the Australian economy.
My view on that is I think it sounds great to do it, but when things become normal, I think unfortunately capitalism will come back to play where the cheaper labour cycles will win again, which is really disappointing. I hope we do something in Australia, but it's human nature. If you can achieve something cheaper and more efficiently somewhere else, people are going to keep flowing to it, Patrick. That's what I think anyway, which will be disappointing.
Yeah. And JD, in terms of markets and industries for you guys, do you think that there'll be some that will come to the forefront as being a hub of activity before others, do you think?
Yeah, we're already seeing businesses that are still in local manufacturing or fresh food, like local food producers and tin food producers and things like that. They're massive demand from the supermarkets and from those chains, so they're ramping up as quickly as they can. And I agree with Paul that it's hard to see that not going the way that it's gone decades ago in future, and the only way to avoid that might be some sort of protectionism, but we all know that the risks of that. So it probably is, people have to tread carefully, and that's why there's a lot of opportunity around at the moment for temporary labour hire and changing the industries they're in. And as I said, we are seeing some labour hire firms struggling because the industries they supply to have been decimated, but having to really quickly look at the industries that are starting to do well. And anything to do with, we've seen our cafes and our restaurants and our pubs virtually gone overnight, but you've seen your food delivery services, your Marley Spoons, your HelloFresh, all those just absolutely booming. And the demand from those guys into a lot of our clients has just gone through the roof. So again, it's just a real time to take stock. Businesses that can get through this, they need to be really aware of those other opportunities. So, your freight industries, those sorts of things are really, we're seeing an uplift in that because people need to get stuff delivered around and people are sitting at home waiting for things to come to them rather than go out and get it. So those industries, we're seeing an uplift as well.
Yeah, excellent. And Adam, I suppose the other thing that always is at the back of people's mind at the moment is obviously insolvency, and the government's come out and obviously relaxed some time frames regarding complying with demands and bankruptcy notices, and there is some leniency on insolvent trading as well. Is that something that's coming into fruition with discussions with your clients at the moment?
Yeah, look, a little bit. I will say that I'm not an insolvency practitioner, so definitely not my area, but it will become a hot topic in the weeks and months to come. I think at the moment, clients are focused on putting measures in place to make sure that they survive, and we're only a couple of weeks in, but I think these measures are going to become really important in the weeks and months to come, and that's why we'll be talking closely to insolvency practitioners through that period to make sure they can help clients get through.
Absolutely, I agree with that, and we're having a lot of discussions with clients around that as well. And as I said, just giving clarity and information to our clients is the value they need right now. So, as I said, it's uncertain. We've said it here today. We don't know how long this is going to last for. We don't know what's going to come next as a result of this. in different markets and sectors. And I suppose from all of us and our businesses, it's about providing value for our clients and somewhere for them to turn to look at providing assistance and helping them through these really difficult times. So I really appreciate all your insight, guys, into what you guys are seeing in the market at the moment, and obviously the help that you guys are providing and your businesses are providing to SMEs at the moment in really, really difficult times. So as I said, I suppose all we can really do is encourage our clients to reach out to us, communicate to us, and really look at all the options that are out there and available to them at the moment.
Good on you, Patrick. Thanks, mate.
Brilliant. Thank you for joining me today, guys. Really appreciate it.
Thanks, Patrick.
Thanks.